All right, welcome everybody to Stock Analysis Fridays. We're going to get started in just a few minutes. Okay, let's just do a quick audio test here, and we'll get started in a couple minutes. I just want to make sure the audio is working, and you should be able to see, of course, the Stock Analysis Friday cover sheet on the top there. And that's pretty good. I think we're looking pretty good here. So we'll get started in just a minute. All right, well, welcome to Stock Analysis Friday. It's great to have you here. Today is January 13th, 2022, and this is the type of event where you type in your symbols, and I'll be glad to take a look at them. We look at stocks and ETFs, and if you could just type those in caps in the comments area, that is how we know what you want us to look at. All right, let me go through a few administrational items, and then we'll get started. Hope everybody's having a good Friday there, and so far, a good new year. All right, we got to talk about the risks involved in trading. When we trade the financial markets, we're dealing in a realm of probability, not certainty. So nothing is really guaranteed, but we always try to put the probabilities on our side. Of course, we call that the edge. And with that, you have to understand that you want to be trading with risk capital. This is money you can afford to risk. That way you don't worry about positions all the time, and you kind of trade with an even balanced mindset. Also, to run by any of the trades we talk about today or forecast or anything of that nature past your money manager or financial advisor who know your personal situation. Of course, we do not. And there's a lot of considerations you have to take into account to see if this particular type of trading is right for you. Things like your age, your short-term and long-term financial commitments, etc. And of course, your tolerance to risk. And then finally, we want you to know how to do risk management. And we can help you in that category. We got a couple great books on money management and risk control. My newest book is second from the right. It's encased in green there. It's called Money Management for Traders. This book highlights what you need to know as a trader or even as an investor to apply sound money management strategies to your current trading approach. And then if you want a deeper dive, risk of ruin tables and all that kind of good stuff, we have another book that does that called The Trader's Money Management System on the far left. Now, one of the great things coming up this year is we got a new book on the art of trading coming out. This will be my second edition. My first edition came out in 2008. Super successful, and our publisher asked us to come out with another edition. And so that's going to be released later this year. And that's going to include all our latest software tools and also 2 strategies that we find work really well over the last 30 years of trading the financial markets. We also know the Elliott Wave Technique Simplified book is probably on most of the shelves out there. Anybody interested in Elliott Wave, that's the book for you. And then, of course, the Survival Guide for Traders, which is a reference on how to run your trading like a professional hedge fund right from your home. So those books are available. I'll put the link up in the recording for you to access our Amazon page where you can order any or all of those books. Likewise, we have a lot of software tools that we've developed over our course of trading the financial markets. And these software tools work on stocks, ETFs, future markets, bond markets, and Forex markets. It's compatible on a variety of different software platforms: NinjaTrader, TradeStation, eSignal, MetaTrader 4 and 5, and MultiChart. So pretty much covers the gambit of the major charting platforms out there. And we have charting software, we have scanners, and risk control software. Risk control is a vital part of being successful in this business, of course. And then finally, we want you to like, subscribe, and share. Pass this around. The more people we get coming today, the better, and the more stocks we can uncover. So we had a good week last week. We uncovered a lot of good things. GBTC, which is the Bitcoin. I want to take a look at that right off the bat. It's just done super this week, and we're going to discuss a little bit more about that. So I want to thank everybody, for attending, and it's great to have you here, and we'll be back again also next Friday. All right, so let's come out of here, and let's get to work. So our first symbol I do want to share with you before I get to the ones you want me to look at is GBTC. Now, this is the Bitcoin ETF, Exchange Traded Fund. And this is one that we liked last week. We really like it now because of the following reasons. We've got a green momentum owl. This is the owl indicator. This is one of our tools. And we got the PTF down here as well. And notice here, we've got also 3 time frames. So if you're new here, what we do is we use multiple time frame analysis and then put our software tools on each time frame. So when we look at the charts today, we're going to be primarily looking at the 60-minute chart, which is our short-term aspect of what's going on. We're going to be looking at our daily chart, which is our intermediate term aspect of what's going on. And then we're going to be looking at the weekly chart, which gives us the longer-term view. So when we use 3 charts like that, it really helps us see not only the overall picture, but the short-term scenario of what's going on with that stock. And it really helps us for timing, scaling out of markets, and exiting. At the top, you see this rainbow-colored analyzer here. This is our scanners at work. We're not going to probably be using those today because we're going to be looking at symbols for the most part that you give me, but that is how we uncover our markets each and every week to trade. All right, GBTC, let's get to it. So we think we've got a possible major bottom, at least a significant intermediate bottom at the worst case scenario. So we are moving up, and we have been now for about a week and a half. So we saw the breakout when we were together last week. Indicators have all turned bullish, of course. Now, that doesn't mean the market's going to go straight up, okay? It means it's going to work its way up, but it's going to do it probably in a zigzag fashion because that's what they do. Nothing goes up. There's a little profit to the upside, profit taking to the downside, etc. So the deal is with this is that if this is a intermediate bottom and we think it's actually could be a major bottom. But at worst case scenario, intermediate bottom, we're thinking probably a target between $17.55 and $23.70. So let me know if you're in this, because that is really good if you are. And the stop needs to be at the bottom. Okay. So that's a possibility for you. Now, if we probably will get a pullback, and we're looking at a possible pullback before it goes even higher, right around the $9.95 range to 9.14. And we use our 60-minute chart on the left-hand side to kind of give us an idea of what's going on with the current impulsive wave we see on the daily chart. So a little pullback coming up, but if you go in and put your stop here, you should survive all minor pullbacks. And I think it's going to be a really good trade. Now, there is a possibility, if this is a major bottom, that we could get above the all-time high of 60. All right, but I don't want to say that for right now. Right now, let's get to the $17.55 target zone to $23 target zone, and then we'll reassess then. So I don't think it's too late to go in. I think if you want to wait for the pullback, you can, but this is one of these things where you don't want to miss it either. All right, so any thoughts on that? Let me know if you're in it. Okay, of course. And what's your what price you got in? All right, next one I want to take a look at is the oil market. And I'm going to do this through the ETF USO. And this one also is kind of interesting, because if we look at the long-term chart on the far right, we were expecting a retracement to this area. We got it. Now, if you're an Elliott wave person, this is probably a 3, 4, 5 target zone. This trade to the long side, all right, basically is mandatory that this is a bottom. Okay, and we think it could be, and this warrants a long trade with risk control at this time. So put your stop at the bottom, right under here, and the target is between 103 and 129. So that means if we're right and stocks do move up and get closer to that target, you're also going to feel this when you go to fill your car up, because the prices at the pump are going to return and go higher. All right, so expect that. But this is a nice little way you can hedge that by being involved in the ETF to probably offset some of your normal expenses associated with oil. All right, so that is one we are recommending at this particular point as well. All right, so let's see what else we got. We got gold. Now, gold is something we've recommended before, and that's still on a tear to the upside. So our target on gold here is between 201 and 233. We're probably getting close to a pullback. All right, if you notice what's going on here, it's still pretty strong though. We've got a little bearish divergence building on the 60-minute chart. So we probably could get a pullback into the maybe 165 range, right around in here. But that does not kill the uptrend. This would be a pullback and then another surge forward. So if you want to wait for the pullback, you can, or you can go in now. You could always use options, and so forth to control your risk. Because the problem is, if you go in now, where are you going to put your stop? All right. If you put it here and you have a pullback, you could get stopped out. So you got to put your stop pretty low to survive a pullback that is most likely coming. May not come this week, but it's coming. All right. And that's the only thing, but we are very bullish on gold as a whole. Now, the other one I wanted to show you real quickly here is TLT. And this is the ETF for bonds. Okay. And bonds has been coming down for a long time. And really since the year, 2020, it's been spiking on down. It looks to us, based on our tools, that we're in a little bit of a move up. But it also here, these PTFs here are indicating the bottom is not in yet. So we have a set of tools here saying that the bottom's not in on this, but short term on the 60-minute, our tools are saying we're still in a movement to the upside, which represents only a correction, not a change in trend. So we're not all over this yet. I mean, you could trade the short-term time frame, but if you want to take a more significant position, we're going to hold off until it gets more bullish on both the daily and weekly charts, especially the PTF. So I think those are three good ones to focus on. Last week we hit a whole bunch, but these are looking really good. All right, so let's get in there and see what we got cooking. So we got JP, how are you? FRO. Okay, let's take a look at FRO here and see what we got cooking. All right, so here is FRO. Couple things on this. All right, weekly chart. We still have a fairly bullish owl. and that's the histogram right here. Once again, we have an active pyramid on the actual daily chart here. It's a little bit different because we have a red owl here, we have a pyramid here to the downside. It was taken out, so we have some volatility. We have a gap here. So long term, you'd still be long with your stop under this pyramid. Short term, I'd probably leave this alone because we got a green owl and a green PTF here. So it does look like it's going to get above the 1450 mark, maybe 15. Okay, so if you want to take that type of trade, you could, but you had a gap. And these things are notorious for filling those gaps at least halfway before going up. I think you can find a better candidate. Okay, this one does not knock my socks off. All right, so that's FRO. Let's try CTRA. Let's see what's cooking with that one. All right, CTRA is one that is moving down right now. This would be a better short trade. And certainly the 60-minute chart at this particular point has a red PTF. I wouldn't go short until we got below this pyramid trading points stop out, because this has been a bullish trade on the short-term time frame, nice and profitable, but you don't want to go against the last and final pyramid here, which represents a key stop area below this support level. Wait for prices to go down here. Check your indicators. This has got to be red. It's green right now. This is okay. This is okay. This is okay for a short position. If you're short based on the daily chart, your stop's going to be high enough here that you should survive any normal pullback. And it looks like we're going lower at some point. So short, not long there. If you're going to get into it for the first time, wait for that owl to turn red and go below the pyramid on the 60-minute chart. All right, CR. Let's take a look at CRGY and see what's cooking on that one. All right, not a lot of history on this, probably like an IPO or something. Okay, definitely bearish for the most part since the open. And we've had a spring off the bottom here. So the 60-minute chart, it seems kind of bullish. We still have a lot of momentum that needs to be corrected here on the weekly chart. We do have bullish divergence. Well, not really, because we don't have a low here, so no bullish divergence there. And we have now a yellow owl. So it's hard to know if we're going to get a big change in trend here. It's too early to know that, because technically on the weekly chart, you've got an active pyramid to the downside. So this is really at this point not tradable at all, because we're not getting a clear enough target on the move to the upside. So I would stay away from this right now. I think you can find better on that one too. And then finally, OVV, okay, is another one. And on this one here, you've got a red owl and a red PTF on the daily and green. So again, you're going up short term, longer term down. And it looks like too, we're running out of steam for the owl on the weekly chart after this move up. So if you're trading this long term, your stop is still way down here. You're still active, but this is not good. So you don't want to go long here. If anything, possibly think about a short based on a fib correction on the weekly chart, but you can't do that because you have still a lot of green on the 60-minute chart. So again, this one you want to stay away from, either to the long side or the short side at this point. And that's the way I would play that. Okay. All right, so let's take a look. Microsoft, MSFT. Now, Microsoft looks pretty good on the weekly chart. Let's take a look at that overall, however. All right, so here's the kind of interesting thing with Microsoft. So we had an Elliott wave 3 here, okay, and we had a correction so far enough into this target zone. Now, it's very possible we could go deeper into the target zone. That's very, very possible. We don't have a green owl yet here. We do have a green PTF here. So on wave 5, which is part of the Elliott wave count, wave 5 goes higher than wave 3. You'll probably at that point get the PTF to be correct and signal a bullish move for a new high then. But it's got to work out the correction first. So we've got bullish a little bit here. So we are pulling up a little bit, but we have an active pyramid to the downside here. So while I would watch this for a potential long trade, be careful not to get in until it is ready. And I don't think it's quite ready yet. So we'll take a look at this next week, but it certainly could be getting ready. Again, it is very possible as well that this could move back further into the target range And the target range really is between 235, roughly where prices are now, all the way down to 160. So sometimes we go take a little dip a little further, and that's why it's so important not to jump the gun and get in early before the lower time frames turn around. This is one of the advantages of multiple time frame analysis, and that really, when you look at the different time frames, it gives you an overall better picture of entries. So those were fun to look at. I don't see anything quite ready there. Let's take a look at Home Depot. This is another one here on Home Depot where, it's working its way off of wave 3. So here's 3, here's the target for 4. Barely touched it here. And you've got a green pyramid here, you've got green here. So this is kind of one where, if you go long here, it certainly from a technical standpoint makes sense. The only problem is that you would have to have this as an ABC correction with the final 4 down here, and there is an alternate wave count: A, B, C. Okay, but chances are, you can't miss it either. So if you wanted to take a long trade here, you've got pyramids on the short-term time frames and the intermediate time frame, so you could take a long position here. Just put your stop, here, or even down on one of these pyramids here. And if you get stopped out, you're going to have to try again. That means it's going to go back into the target zone. But at least on this one, you're getting everything signaling a trade. So this is one of those you would go ahead and take advantage of. So that's Home Depot, okay, at this particular point. So Home Depot looks so far like the one I would probably trade today on as a recommendation, but realize you have to have your stop in place. All right, I think that's pretty important. All right, the other one I wanted to take a look at, let's take a look at AMD here. All right, and AMD is kind of in an interesting situation too. Here's another one where we're starting to possibly see some type of bottom occurring. Now it went way up to over 160 here, so that's a 3, and then corrected down here. We still have a red owl here, so the momentum has not changed quite enough yet. And we have active pyramids to the downside, one forming here. However, on the shorter time frames, we're starting to see this basing pattern. So let's just see what happens. We need a breakout from here before I'm probably going to get somewhat excited about it. We have some bullishness here, but it's waning a little bit. We still have a little bit of red here. So no red PTFs, which is this indicator here on any time frame. We do have a green one on the long-term time frame for wave 5. So I think if the bottom can be put in, I think maybe we're looking at about a 159 to 224 high on AMD at some point. But let's make sure the bottom is in and take a look at that one next week. Okay, so we'll do that. Let's quickly run over and take a look at the intraday markets. Now, we run a day trading room, so we're pretty active in this area. And so here is the MNQ March 23rd contract. When we day trade futures. We do not day trade stocks for a variety of reasons. But this is a market that we like to trade. And again, we use multiple time frame analysis for this. And again, check this out. The short term on this is 15 seconds. We have 1 minute here. All right, and 5 minute here. So basically, because of the type of technical analysis that can be used for trading the different time frames, our tools work across all time frames and markets. And this is an example of it working on very short day trading time frames. So this is the MNQ. It's moving up off of bottom here, but we got to keep an eye on this. This is now green. This is green here. So this so far, as long as this stays red, it's looking at a correction only. And so we have to pay attention to that. And if things roll over, we may decide at some point to take a short trade, but you certainly could take a long trade on the lower time frame. If we take a look at the MES here, which is the micro E-mini, and you can certainly trade either the micro or the regular E-mini ES contract. This is another one here where it corrected okay, down here, and now it looks like we possibly could be seeing some movement to the upside. So let's, for day trading, we use exactly the same type of analysis as anything else. We go ahead and take a look at here. We see if the correction was enough, just a little bit shy, but close enough. We're having a bounce off here. So we'll probably get some type of pullback. I would wait for the pullback. And then if that bottom holds, probably take a long trade. And the target on this, certainly at that point, we can be more accurate, but it looks like roughly for right now, maybe somewhere up around the 41.10 to 40.25 range short term. Okay, so that's basically how we do it in terms of trading the E-mini. Okay, and that's the micro. Okay, you've got everything okay on the short term. You've got a pyramid here. You could have gone long there for an early entry. You now have green here. Okay, so right now the only issue here is if you went in here and put your stop here, your risk reward is a little only about 1-to-1, maybe 1 to 1.5. We kind of like it 2.0, so we would like that to pull back. And the pullback probably will be to the point of inflection here. So let's just grab a couple fib retracements, and we're probably looking for a pullback in this area to pull the trigger to go long. Okay, anytime at this point, what I would do, anytime the risk to reward is 2.0 or better, I would go ahead and take a position on this. So that's kind of how we do that for sure. All right, any other stocks? Let's see, what do we got here? All right. How many people out there do day trade, just out of curiosity? And day trade futures markets. We like to day trade the futures markets, preferably over stocks, simply because it's easier to for the accounting, and it's also easier to go short versus regular stocks because of the uptick rule, and also lower account sizes are only needed. You only just need margin, and if you want to change your position from long to short, basically if you're long 20 and you want to be short 20, you sell 40, and it's that simple. All right, let's go back and take a look at the longer time frames here and see if there's anything else coming in. All right, I think we got pretty much everybody's suggestion for this week. Let's see what we got. How about Ford? Let's take a look at Ford. Somebody had mentioned Ford to me earlier. So we looked at that a while back. So we've got kind of an interesting thing with Ford here. So here is where we had a nice move up, and now the retracement. And this is kind of interesting. I'm just going to open this chart up a little bit and focus on this current move to the upside. So on a situation like this, we had a target here, all right, and then it went back up, and then it tried to take the bottom out. It did not do it yet. We have a bearish pyramid. I don't want to go in yet. Got to get above that bearish pyramid for now. But the target, if this is the bottom, is around 23 to 31. And the shorter time frames have rolled over. So we just want to get above that 1 point here before we consider a long trade. And you should have the 2-to-1 ratio in your favor, even at that point. So I would wait on this a little longer, let it get a little bit higher, and turn that weekly chart a little more bullish at this particular point. All right, let's keep going here. MDT, let's see what we got cooking there. And this one is for William. How you doing, William? Okay, and also tell me if you're long or you're short or you're kind of thinking about it, like a watch list type of thing. All right, so we've had a nice move down on this. Let's open up that chart here and kind of see where we are in this move. So this stock's been around for what? 2000, I don't know, 18, 15, right around that period here. Let's see if we've got the COVID low here. So this one's a little further along than some of the other stocks. Let's see if we've got a situation here. I'm going to draw them right up to here and here. So we've hit the target zone for the retracement. You still got a very, very strong owl to the downside, which is measuring momentum. So whenever I use the word owl, that's momentum, okay? You've got the PTF now in the neutral area being yellow. So it did what it was supposed to do. And it's right about 75% of the time. So every time it goes from either a red to a yellow or a green to the yellow, that means it was accurate, predicted a new low, it came. And then when the new low comes, if the momentum's not strong enough, it turns it yellow, vice versa for an uptrend. So it works about 75% of the time. This is when it didn't work back here, but you can certainly see all the yellow solids to yellow after that. So it's about 75%. And so it got down to the target zone here. So it's not calling for necessarily any more lows. It doesn't mean you can't get any more, but the momentum is waning. And we still have an active pyramid here. So let's take a look at the short-term time frames and see that's starting to look a little basing here. So here's what I would do. You actually still have an active bearish pyramid here. So you really don't want to go long yet. Okay. This is, again, where having the right trading tools makes all the difference. You have to be able to assess what's going on technically in the market. So this is identifying this level here as a key level of support. And so any trade before taking out, resistance, before taking out that resistance level, all right, any trade before that is very, very speculative. Okay, so you want to wait for that to be taken out. And it certainly may be, but we'll go ahead and think about a long trade then. And then if that happens and we do have a bottom in, then the next thing you got to think about is, where is this baby going? What's the target zone? You always have to have a target zone to figure out your risk to reward. So go ahead and draw that in here to here to here. And if that bottom holds there, you're looking at about 144 up to 186. And in terms of the Elliott wave, that's a 3, 4, 5. Okay, so that's kind of where we're looking at that on the current wave sequence. So that's MDT. Watch list, not yet. Okay, that's how I would work that. All right, Disney. Let's take a look at Disney here. And this one is for Dan. How you doing, Dan? All right, so Disney retraced nicely here, perking back up. I don't think we looked at this one yet. So some of these all look the same, right? So in this case here, looks like we've got a pyramid to the downside here. We've come up here. So things are improving on the shorter time frames. I think I want them to improve a little bit more. We've got a pyramid sitting here at this price level here. So that probably, let's grab the, let's see exactly what that price level is on Disney. Let me grab the data window and put that on the price bar where it represents that pyramid, which is 108.84. Let's go over here. So we're talking 108. I'm trying to find it on here. Close enough. So you got to get above here. That's 108.84 right there. Okay, so you got to get above this area here for that pyramid on the weekly chart to be nullified, voided out. Nice short trade, good money down there. So if you're trading to the short side, that's going to be your stop to get out as well. So things are improving, and look at how dramatically the line has moved up off the bottom, even on the PTF, almost turning it green. So this is pretty good. All right, not too bad. The only thing I'd wait for here is to get above that level, and then I'd pull the trigger and go long. And if you do pull the trigger and go long, all right, you're talking about a target zone on this one, probably around this here, of around 194 to 261. Okay, so double your money target zone. Not too shabby. So even if you wait to get in a little bit later, you still got a nice double your money just about on this one. So that looks pretty good. Nice pick. I would hold off on that. So let's put Disney on a watch list. All right, along with the other one, and we'll keep an eye on that. All right, super. That is Disney. All right, let's take a look at SPOT. This one is for Adam again. How you doing, Adam? All right, so give that a second to load. All right, this is looking pretty good too, Adam. Really good. All right, so now we've come up off its bottom here. Here is the pyramid stop. So that might not be a bad area like the other one to wait for it to get above. We've had 1, 2, 3, 4, 5 pyramids in a row. Now, with the rule base, after 4 pyramids, if you get an MP, minor pyramid forming, which indicates a possible correction or new trend in the opposite direction, only after 4 consecutive pyramids can you consider actually entering on that. Okay, so if you were short, you could cover and go long. All right, it's more of an advanced technique, so to speak, but you certainly have all the bullishness coming in now on the daily charts. So I would take that trade. Okay. So SPOT is an immediate. All right. I really like it. We'll go ahead and take a look at the, that's a nice trade. We'll go ahead and take a look at the target zone for that, but let's see what's cooking with that here. Now, this kind of like Bitcoin, all the way up and even all the way down even more. So where is this going? Well, it's, it's goes back to about 2018. That's not a very readable Elliott wave count in terms of the overall sequence. If anything, maybe a top here, 1, 2, 3. We're probably going to 4, possibly, and maybe 5, or maybe 5. So here's what I would do with this. You've got two things. Either this is going to be a corrective trade of significance or a completely change in trend to the upside. Both of those alternate wave counts result in a bullish trade. So when that happens, that's a good thing. Next question is, let's be conservative and figure out where just a correction might end up. And we're looking at around 157 to 214, and we're at 90. What do you think? That's almost a double your money too. So I would take this trade. All right. So spot is one I would take. Do your risk control for proper trade size. You've got a green owl, green PTF, green owl, green PTF. The only thing going against you is this pyramid here. You could go in with half a position at this point, and then increase the position when you get above the pyramid, or you can go in all, put your stop at the very, very bottom because you're getting in really early, and take that baby, try to take that baby up to the retracement zone. So I'm looking at this as a good one. All right. I like spot. So that is the one so far today that's a winner. All right. EQX. This is for JP. How you doing, JP? All right. So let's see what we got here. Let me just write down spot as one, and we'll take it from here. All right. EQG, again, history going back to about 2018. Move off the bottom on this one. All right, so here is a situation very similar to the other trade. If you want to get in early, you can certainly do that. I think at this time, you've had the pyramid here. You've got green here. You have no red here. This is now turned back to green. I don't know if you can see that, but it's starting to now. So this is an entry. The only difference is you're going against the P pyramid here. What I like about this a lot more is that the owl now is very close to going towards the 0. This is green. So you have two options. You can either wait for it to get above the P if you want to be super conservative. That's probably right around this area here. We're getting pretty close. All right. And then take her on up. But looks pretty good. Target on this one, you got to go for the retracement target. And here's where we may have a little bit of an issue here. So let's see what we got cooking on this one. I'm going to bring it down to about here. I think you're okay for retracement zone with the stop being pretty much at the bottom. That'll put it smack in the middle of it. So I'm thinking okay on this. Let's put EQX as a go. Okay. And again, with a caveat, if you are trading against the pyramids, which again, you've had 1, 2, 3, 4, all right, to the downside. And you got one generated here. So you are going against the longer time frame a teeny bit here. So if you wanted to wait for the pyramid to get taken out in the weekly, certainly a fine thing to do, but then your risk to reward may be a little off. That's the problem with that. So I would go in and do it now and put your stop at the very, very bottom, okay? Actually, let me get that down there, okay? So that's where that's looking now. And going with half a position because you're going against the longer time frame. But that's okay on this one. HG, let's see what we got there. So some, if the short-term charts aren't as bullish as I want them to be, and I have a situation where the long-term chart is still going against me, those are the ones I'll probably hold off on. If I have really significantly bullish time frames on the lower time frames, sometimes I'll jump the gun and get in early on those, but they have to be really good. All right, so AG, let's see what we got cooking on this bad boy here. All right, kind of a messy chart on the weekly. Let's open that baby up. So we had a move to the upside, a move to the down. It has these little spikes in here. All right, so maybe it's due for a spike up, right? Messy owl kind of a messy market. All right, when I see something like this, I kind of cringe a little bit because I'm wondering if I can find something a little clearer in terms of the Elliott wave. Let's see if the lower time frames help us. I'm all about clarity. If I don't see the clarity, then why bother? Okay, I move on to something else. All right, so in a case like this, I'm not seeing it. Not seeing it. Lower time frame, little sketchy even there. Okay, little sketchy even there. So I kind of wouldn't do anything with that, JP. All right, let's keep going here. I like your EQX one better. Okay. All right, very good. Good one. Anybody else? I think we went through them all for the most part. Let's see. Give you a second to. Did I miss? If I missed any, let me know and go ahead and put them in the chat area there. And we'll take a look at those. Market right now is up about 18 points. NASDAQ's down about 59. OMC, let's take a look at OMC. All right, first thing I want to do is open up this weekly chart. Okay, so tough market to trade because the pullbacks are significant. You got to give the stops a lot of leeway here. All right, so we've got a nice spring to the upside here. Question is, where is the target? Let me just try again. This is not knocking my socks off because again, the clarity is not that great here. All right, so we're talking about, yeah, it's pretty tough. I mean, I'm not even going to venture a guess on that one. Okay, I think probably at this point that's a little too messy. Let's see if and look at the swings that we're seeing. This almost mimics what we're seeing on the Dow. Boom, boom, boom. Okay, very tough position trading during this period during a bear market. So in a case like this, all right, yeah, these pyramids did really good, but you're going to have to trade the 60-minute to go inside these swings. So the idea for short-term trading is when you see a market that goes up and down, zigzag, try to get and trade the time frame where you can be profitable on the short moves or don't trade it at all. All right, maybe a longer term trade might even work at that point. So I'm thinking something like this. Here, let's open up the 60-minute and just analyze this current move up. So it's been underway to the upside for quite some time. So right away, a long trade has got to be suspect because you're getting in late. Obviously, you had bearish divergence. So what happens a lot of time with folks is they tend to get in here when they rely on at times newsletters and things like that, because newsletters usually wait until there is kind of proof that the trend is in place because they need to do that to validate their recommendations. So that's the problem. Anytime you get in late, then you have to be subject to the possible risk of a pullback. And that's what I think we're getting now. So in terms of how deep this pullback is going to go, let's run this up to here. So this could be pretty significant. All right, 78 to 72. And you actually got a short trade generated off this pyramid here, which is great because you can put the stop right here or even higher up here and let it unwind. You got current prices here. Even if you put your stop here, you got pretty close to a 2-to-1 risk to reward. Okay, so that's pretty good. All right, so you're good shape there. So I'm thinking, let's see what we got here. Oh, nope, can't take a short trade, not with a bullish situation. So you've got a rebound on this right now. So you kind of can't do anything on that. All right. So I wouldn't try that one at this point. Just no go on that one. All right. So you got to wait on that one. All right, let's take a look. URNM. Let's see. Okay, so this one goes back to 2020, COVID low. Then it came back up. All right, hell of a time to release an IPO. All right, so we got bearish PTF and momentum on the owl on the weekly chart. The system has a bearish pyramid here for short trades. Same here up here. We would have gotten in a little bit early before the gap down in that situation. So on this one here, the pyramids had you short before the gap down. So they did its job. But again, it's kind of a messy chart. Now, what's interesting on this one is you've got a nice pennant right here at the time. Well, let's just draw this one more like that. So you're kind of heading down into that area there. Let me just see. Let me open up this here a little bit more. Yeah, so there's not really enough history. You've already gone pretty far down. So at this particular point, don't go long on it. It's a short trade only. But even now, it's because of the gap, it's really gotten away from you. So you really can't do anything. The trade would have been back on the pyramid on this breakdown here below the channel, okay, or below the pennant on this time frame here. If you draw that in like that, so you had a break below the pennant and a pyramid, so that would have been a short trade there. Okay, so that is URNM. All right, so wait for the pullback to 75. Let me know what stock that's for. Is that for OMC? And I'm talking to William. So William just typed in a comment, wait for the pullback to 75. I just want to make sure I look at the right stock to take a look at that. So just give me the stock, type that in, and I'll take a look at it. All right, anybody else? Might have been OMC probably. Let's see. Probably OMC, I would think. Yeah, so on OMC, we're actually looking for a pullback to 78 to 72. Okay, so 78 to 72. So that's what I would do. And if that happens, chances are the PTF will remain green, which is a good thing. And then at that particular point, you can go long. So let me just draw also the fibs on this one. You can kind of see on the daily chart what we're talking about. So that's kind of where we think it's going. And again, this technically generated a short trade here, okay? So you could actually go short if you wanted to on this, but not against this. So this is that owl's got to turn bearish before you consider that, and you still have an active pyramid. So I would not short this. I would just wait for the correction to finish and then go long, okay? And you may get another brief high before it corrects, but any trade here now is very risky because of that reason. So when they're that risky, I don't chase the trade at this particular point. I would not short this, and I would just wait for it to correct and then look for the long trade, because it seems like the trend could certainly be up. But this is one of these where it's back and forth and back and forth. So that's a pretty messy chart. So it's not my favorite to begin with. Okay. But that's kind of how I would do that if you need to. All right. Anything else? Boy, time flew. All right. So I think the winner is SPOT. Let's go put in spot SPOT. Okay. So I'm liking spot for a long trade to the target here. And again, if you wanted to wait a little while for this pyramid here to get taken out, you could, but I would go in now because you've got green here and green here. So it's signaling more highs. So the chances of this pyramid getting taken out based on the bullishness on the lower time frames is extremely high. So when that happens, I go ahead and go long immediately. So this is one I like. And then I like JP's EQX. Like spot better than EQX, but EQX is second in line, and there you have it there, okay? So the reason why I like the other one better is because on this one we have yellow and yellow. The other ones we had more green, okay? But we do have the pyramid here, and again, the pyramid sitting still up here on this one. So, but okay, it warrants the trade because you do have a bullish amount on the lower time frames after a long run down with one 2, 3, 4, 5 pyramids to the downside. Usually that's about what you get in a impulsive wave. And now we've got a pyramid to the upside. So that's kind of looking what looks like a pretty good entry there. So I'm all on that one as well. Okay, so both of those are okay. All right, well, what do you think? How many people are in Bitcoin? GBTC. Oh, let's take a look at the other Bitcoin too. Well, it's the blockchain. This is another one, okay, that's coming off its bottom here. Now, one thing is make sure you don't bet the farm, okay? Take a normal amount of risk on this trade like you would any other momentum trade, and set your stop at the bottom and do your position size. Don't bet the farm on it, but this looks pretty darn good, okay? So I'm liking this a lot. Probably going to get a pullback. All right, it's been running up from $3 to $6, so it's already doubled its money. So you can expect the pullback, but I'm expecting this thing, if it really starts to run, just like on Bitcoin, possibly a new high on this at some point. Not tomorrow, but possibly worst case scenario. All right, so we're talking worst case scenario would be something like a retracement on this, and you're talking right around this period here. So you still got 25 to 39. You've got a lot of room for this. Okay. So I'm going to put down RIOT and Bitcoin, GBTC, also on the winners list this week. So we actually got 4: Spot, EQX, RIOT, and GBTC. What do you think? All right. So again, thank you everybody for being here. We had a fairly good turnout today. The more people we get, the more stocks we can look up and the more opportunities we can uncover. So some of these you may be aware of, some not. So you can add those to your short-term portfolio for trading. And that's just super. That's the whole purpose. So get a second opinion and maybe walk away with a new opportunity, that type of idea. All right, listen, everybody, have a great week. I think I've gone through everything. What I'm going to do is I'm going to go ahead and just, like I normally do at the end of every session, I'll just put the time frames up here for intraday because they're kind of fun to watch, and you can take a look at this. So here's a situation where we're coming down here. Look, we made one more little low back in here. So let's move our target down a little bit. Okay, something like that. So I would be looking for a long trade here up to the target zone here. Make sure this owl turns green first. We don't really have that yet, but we just kissed it there. It probably, there's a good chance it could come back down into the target because we have this pyramid here. It actually was stopped out though. So first entry here, stop out here. So we're probably close to a bottom here, but don't be too eager to jump in. Let me make sure this thing bottoms. But this would be a trade that I would think might be pretty good for a day trade once we're sure that bottom is in, or the probabilities increase, the bottom is in. And you have green over here, so that high should be taken out, which is 3. So we got 4, we got 5. We just got to zero in on when 4 is over and then go long. So this, let's wait for this to turn green here. If this turns green here, you can also wait for a bullish pyramid, or you can take a small position, go in early if you think the bottom is there, and then see what happens for that. So that's the kind of thing there. All right, so I'll just leave that up. You guys can watch that, and we'll see you next week. And I'm laughing because Bill is putting it's Friday the 13th. Oh my gosh, right? I didn't think about that. Friday the 13th. All right, don't take any trades. All right, my pleasure. You're welcome, JP, and thank you for coming. Good stock pick today. You did good. Everybody did great today. All right, so hopefully that was helpful. I enjoyed it. I always love being here every Friday with you guys. And I'll see you next week. Have a great weekend. All right. And here we are, new year, right? All right. So I'll leave it here. I'll put a little music on, and have a great week. Now, if this market goes down and stops you out, all right, that just means it's going back down into the target zone. This was not the bottom. So you do want to get out, and then you try again. When you see a reversal come back to the upside, you can take another trade. Sometimes it takes twice to get it right. But this, you definitely don't want to miss it. So this is, you want to be long here. And if this is a bottom, you'll do real well. Otherwise, you'll get stopped out and have to try again. And that, my friend, is day trading. Just as a side note, before, if you just tuned in, I'm not sure, but we calculated our trade size and risk control using the risk to reward calculator. So our loss will never exceed 2% the trade risk, unless, of course, there's a market risk event and we can't get out for whatever reason at our stop. It's always a possibility, but doesn't happen. That doesn't happen that much. Like 99% of the time you get out where you're supposed to. For those times when you don't, that's why you want to make sure you always trade with risk capital. You always have to protect your downside. The analysis is correct. That'll take care of the upside. Your risk control's got to take care of the downside. Because technically, we really don't know. We're planning on this being a bottom. But you know, it certainly could come back down here and make one more bottom before it goes. And that's why you have to use risk control. And if it does, just stay with it and go back when it turns around again. You don't want to miss the potential because it did technically kiss the target zone here. So you want to be long here. Let me just see what's going on in the other time frames on this. It's looking about as good as it can look right now. So basically what I do in a situation like this, I try to fight the urge to scalp out, and I try to make it to the target zone with most of my position. But if the market gave me a big windfall, we get above wave 3, then I probably scale out a little bit if the indicators turn bearish, which means we'll get kind of a pullback. Also, you'll when you trade a market enough, you'll know statistically on the number of contracts you usually trade, when your profit gets to a certain amount, probabilities of a correction at that point, not necessarily that you'll be stopped out, but a pullback increase. And so those are also areas we possibly could scale out. We also use 1B and 2B reversals, pyramids in the opposite direction, and so forth. Well, it's all very structured. All right, so I'm going to leave you from here because this is going to take a while to unwind. I can't keep the room open all day. But thank you again for being here, everybody. And we'll see how this trade turns up. It's all up to the upside for right now. Probably get a little bit of a pullback at some point. All right, so have a good one, and we'll see you back here next week. Thanks so much.